Hi, everybody. My name is Andrea LaPlante. So excited for all of you to join us tonight. I'm a national marketing director with the Juice Plus Company. I'm also a certified health coach for the Dr. Sears Wellness Institute. But tonight we're talking about taxes, and we have such a great way to share this information because one of the things that this business and having a home-based business does is it allows the independent contractor a way to have write-offs, right? So we get write-offs having our at-home business, and that can be confusing. So we brought in Becca O'Malley tonight, who is offering, very gracious to offer her time and share. She's a CPA with her own business, and she is now a new Juice Plus partner. She actually has, she's a homeschool mom. She's a homeschool mom. She has her own business. She's a Juice Plus partner, and she's expecting her fifth, right?
Yes.
Back to your fifth. So I share that with you because she's incredible. I mean, just incredible. And she needs all the Juice Plus to help keep her going. But we're so excited tonight to have her here. Honestly, we're really grateful for you to put work into your extremely busy, hectic day to share some information with us. And we've had questions over the years, teammates that say, you know, what exactly can I write off? Or someone asked me earlier, the way our earnings are broken down, we have earnings and we have retail profit, and then we have commissions, and there are other little things, the way the marketing plan's broken down. Do we take the whole lot and share it with our CPA and get that? How exactly does that work? So I'm gonna, because this is not my forte, I'm gonna hand it over to Becca, and she's gonna share her presentation and answer those kinds of questions for us. So take it away, Becca, and thank you so much again.
Sure. Yeah. Thank you for having me. So I'll just introduce myself and then I'll go in. I had a slide presentation, so I'll just go into that afterwards. But yeah, so I'm a CPA. I've been a CPA since 2008, and I've had my own business since 2015, but did taxes and worked in corporate and public accounting prior to that. And I do have 5 kids, and Andrea is actually my neighbor. So over the years, I've just been learning a lot about Juice Plus, and I constantly ask her questions. We recently got a tower garden, so we have our little seedlings growing. We've been starting to take the capsules. So yeah, just with all the kids, just trying to make everyone as healthy as possible. So I thank Andrea for sharing her knowledge and her business with me as well. So I will just start talking about tax deductions for self-employed individuals, tax reporting. And if any of you have questions, feel free to jump in as I'm talking, or you can save questions till the end as well. So I'll just start with the presentation. Okay, so my assumption is that most of the individuals on the call are self-employed. There's a few different ways that you can structure your business as self-employed individual. And so the tax deductions and tax reporting that I'll be talking about will be applicable for all of the types of business, but specifically I'll just be talking about the individuals that are like sole proprietors, or perhaps you set up like a single member LLC. Let's see, one second. Okay, so the agenda that I'm going to go through, just who are self-employed individuals, what are the different business structures that you could have, what are the tax reporting obligations, how can we determine the net profit or loss from the business activities, and then there's a few tax deductions in addition to like the normal expenses that you might incur. There's some additional tax deductions that you can take on your tax return. So I'll talk about those. That's the qualified business income deduction. And then as a self-employed person, we don't have a 401k, but we still can contribute to retirement accounts if we would like to. And those contributions can also be deductions on our tax returns as well. And then just some basic like record keeping and best practices. So who is self-employed? So basically, if you carry on your own trade or business, you're not an employee, you're kind of doing work, whether it's part-time, full-time, you could be a member of a partnership, or you're an independent contractor. So with Juice Plus, it's set up where you're an independent contractor. And so you are considered self-employed, again, whether you set up your own business to have an LLC, or you're just kind of, being a partner with Juice Plus and earning income from Juice Plus. You're an independent contractor, so you're considered self-employed. Whether you make a couple $100s, whether you make a couple $100,000, you're still self-employed. So as I said, you can set up your business for in different structures, and there's pros and cons to each structure. But in general, if you just signed up as a partner with Juice Plus, most people probably operate as a sole proprietor. So what this means is, you haven't registered a separate tax ID, you haven't registered with the state as, a separate type of business. You're just operating, on your own, and that's sole proprietor. So you directly report your income and expenses on your personal tax return. A single member LLC is pretty much exactly the same as a sole proprietor, but it's for individuals that perhaps you're a little bit nervous. You don't want to expose your personal finances to risk. So setting up an LLC just gives you some liability protection. So if someone were to come back and have, a complaint or file, say someone filed a lawsuit against you for something, the LLC just gives you protection against your personal assets. So as long as you're keeping all of your records for your business separate, it would only expose your income from the business to like liability if someone were to sue you. So it's a good way to kind of protect personal assets. And there's other business structures. I'm not going to talk about them too much, but a partnership. So maybe you and another Juice Plus partner are working together, and you have a bank account that you share. You're working together. That could be a partnership. Or you and your spouse, if you both are Juice Plus partners, if you're working together, there's certain deductions you can take on your tax return as a qualified joint venture. And I would say the last one is probably rare, but if you have your own business, you might do other things besides Juice Plus. So you might have your own corporation, which is set up as an S corporation. Again, it's still a pass-through where all the income is reported on your tax return. But that one, I would say it's more record keeping. It's more formal. It's an actual corporation. So it's probably not applicable to many people on this call, but if it is, feel free at the end, we can talk about that one a little bit more. So depending on the type of structure that you have determines which tax forms you file. So like I said, most of the people on this call are probably a sole proprietor or perhaps a single member LLC. And so all of your income and all of your expenses are just reported on Schedule C of your personal tax return. So what are the tax reporting obligations? So if you make more than $400 a year from self-employment, you do have to file a tax return. Obviously, there's other reporting requirements if you have other income as well. But if self-employment was your only income and you made at least $400, you would still have to file a tax return. And the reason for that is because once you make $400 or more, you are subject to what's called the self-employment tax, which we'll talk about a little bit more, but it's the Social Security and Medicare components of your income tax. So as a self-employed person, again, if you were an employee working somewhere, your employer withholds taxes from your paycheck, they withhold Social Security, they withhold Medicare. So as a self-employed person, you're just receiving the gross income. You have your own expenses.
I'm messaging you here to ensure you come into the app and turn notifications on. I haven't messaged you there.
So as a self-employed person, you're responsible for paying your own share of your income tax, as well as the self-employment taxes and Medicare. And those are based on how much money you make. So as we talk about in the later slides, how to determine your net profit and loss, that will impact how much you're required to pay. And the IRS does require that you make payments on a quarterly basis. If you don't make the payments on a quarterly basis, they can assess some penalties at the end of the year. So tax reporting. So we talked about, filing an income tax return, making the quarterly estimated payments. The next one is something like, as I prepare taxes for a lot of people are not aware of the next item. But if you pay someone, if you're doing your own business and you pay someone else that and that person themselves is a sole proprietor or a single member LLC, if you pay them more than $600 in a year, you actually are required to report that to the IRS and then file copies of these 1099 forms with the IRS. So, if you're hiring someone to help out at some events, or you have some other people, anyone that you're paying as part of your business, if you pay them more than $600 a year, just be aware that there are some reporting obligations that you have to do at the end of the year, and those are due in January each year. Again, this next one is probably not really applicable for the structure that that Juice Plus is, but if you have any employees working for you, Even if you're self-employed, you have, someone working for you part-time, you would have to file payroll tax filings for them and withhold Social Security and Medicare and remit that to the IRS. And then different states have annual filing requirements if you register as an LLC, even if you're a single member LLC. There's usually like an annual filing requirement and an annual fee you have to pay. And then some cities and towns, even if you're just a sole proprietor, if you're working from your home, they might also have requirements for you to register that you're like an at-home business. So just something to be aware of. Okay, so self-employment taxes. This one, again, I have clients and many times the clients don't really understand like what self-employment taxes are. They just know that they have to pay them. So just kind of wanted to talk about that a little bit. So obviously no one likes paying taxes, but as a self-employed person, there are two types. So the regular income tax, and then the self-employment tax is like your share of Social Security and Medicare. And as a self-employed person, you're actually considered the employer and the employee. So again, as I had said, like if you're working for a separate employer, your employer withholds your share of Social Security and Medicare from your monthly or your biweekly check. And they also, the employer pays a portion of Social Security and Medicare out of their funds. So the total Social Security and Medicare tax is 15.3%. So as an employee, you pay half of that and your employer pays half. But as a self-employed person, we are both the employer and the employee. So we actually have to pay both parts of that tax. So the 15.3%. Now, because we are both the employer and the employee, we do get to take a deduction for half of that amount on our tax return. So if you pay the 15.3% tax, you then get to take half of that as a deduction to offset your taxable income. So that's one of the deductions, that you would take. So unfortunately, we have to pay Social Security and Medicare tax, but half of that amount can be a deduction on our tax return. So you do want to make sure that you are, you or whoever's preparing your taxes is taking that deduction. So here's where, Andrea talked about that there's different types of, gross receipts or gross revenue from Juice Plus. I'm just talking about a few of the items here. But if you have questions, like if there's certain revenue that you're receiving and you're not sure how to treat it, just feel free to jump in and ask. So the retail profit, this you would include in your gross receipt. So when you're kind of doing your accounting at the end of the year, or if you're looking at it quarterly to make the estimated payments, you want to include any payments that you receive from Juice Plus. So any payments that are retail profit or commissions, you would count that in your gross receipts. Now, what you would not include is if you're purchasing product for yourself personally, and you're receiving any retail profit back on the ones that you use personally, you do not have to include that as income. That's just like a personal, rebate or a refund that you're getting on your own product. But any products that you're selling to customers, you would include the retail profit as well as the commissions in your gross income. So is there any other types of income that you have questions on besides the retail profit or the commission specifically?
And feel free, you can put your questions in the chat as well. But someone had asked about the way it's broken down, the retail profit, the commissions, and we get, you can look at your year at a glance of what you have to actually submit to the IRS. So I don't know if that's different from what you just said, or not sure if that's too vague.
So if it's like year at a glance, it would, that would show you your retail profit and commission. I would say most people operate on the cash basis. So that might show you what you've earned, but you want to only report what you've actually received as payments for the year. So at the end of the year, let's say on December,
what you received, not what you earned.
Yeah. So as an individual person, I would say 99% of people report their tax returns on the cash basis, which means you just report the income that you received during the year. Some larger corporations report on what's called the accrual basis. So anything they've earned or anything that they've that they're liable for, they would report on their tax return. But for individuals, it's just what you've received as payment. So at the end of the year on December 31st, you could run a report that might show you what you've earned, but is not yet, some of that might not yet be paid to you. So you would just take into account what is paid to you. And at the end of the year too, you should receive a form from Juice Plus, which would be your 1099 NEC form or 1099 miscellaneous. And that will also report what you should be reporting on your tax return. It would have the money that's been paid to you during the year. So I would say you should kind of keep track on your own of what money you're receiving and then reconcile that to what's been reported by Juice Plus at the end of the year.
You basically just answered my question on the retail profit. Thank you.
Oh, sure. And then some individuals, Juice Plus might be a part of their business. You might also be a health coach. You might have other income. So you can, if you're kind of having like all this income as part of your business, you would obviously report that other income in addition to what you receive from Juice Plus. But the IRS is going to get a copy. So Juice Plus prepares their 1099 forms and they file that with the IRS. So the IRS is going to be they have a system that matches what you report in your tax return to what's reported by Juice Plus. So you want to make sure that those amounts agree. And then, like I said, you might have income from other sources as well to also include. Now, one item here I want to mention is cost of goods sold. So when you're preparing your Schedule C of your tax return, you would report the gross income, which we just talked about, but cost of goods sold, I would say this probably isn't, it might not be relevant or it may. So cost of goods sold is any direct cost involved in obtaining inventory. So because in the Juice Plus model, the inventory is shipped directly from Juice Plus to the customer, and we're not really handling the inventory or shipping it ourselves. I would say that, unless there's something that you think perhaps would be a cost that you're incurring to deliver the inventory to the customer, that this one is probably not applicable. So we will have a bunch of other expenses that are applicable, but I think the cost of goods sold, just because we're not handling the inventory or making the inventory, is not really applicable.
So for example, if you're sending out samples, you take it to the post office, obviously the postage and buying the packaging and all of that, you keep your receipts for all of that type of thing.
Yeah, so those we'll talk about on the next slide. Those are
Okay.
all of those, including the cost of the sample is definitely deductible. But that's more like, I would say that's more like advertising, like marketing, like you're sending someone a sample to try and get a sale. Whereas like this cost of goods sold here is, someone has purchased something and then it's the cost of giving them the item that they purchased.
There's a question in the chat. Is there a maximum amount you need to earn to have Social Security and Medicare tax paid out?
Yeah, so you do need, if you make more than $400 if your net profit from the business is $400 or more, then you do have to pay some Social Security and Medicare. But if it's below that, you don't have to file it on a tax return.
Okay.
Okay, so here's, I have a few slides with different expenses. So, these are like, I think like the key slides that the other stuff is kind of talking about the taxes and what needs to be filed, but I think these next few slides are the ones that we are really here for, is to see like, what can we deduct? What are things that we can benefit from? So the IRS has said like, you can deduct any expense that is ordinary and necessary. So ordinary means that someone else doing the same type of business would also incur these same types of expenses. And necessary just means that it is somehow related to your business and providing some benefit to your business. So again, here's a bunch of different categories. So advertising and marketing. So Andrea, like sending out the samples. So the cost of the samples, again, if you're purchasing product and then you're sending that to a customer as samples, you can deduct the cost of the sample itself, as well as the postage to send it out. We will talk also in this slide about mileage, but I mean, if you're driving to the post office specifically to mail this sample, or you're driving to see a customer and you give them a sample, that mileage can also be deducted. So advertising and marketing, this could also be if you're paying any fees for social media sites, if you're purchasing marketing materials from Juice Plus, any types of expenses related to advertising or marketing the products from Juice Plus or from your self-employed business. The next one is fees. So annually, there's a partner fee that you pay to Juice Plus. You might also have if you have any bank fees, if you have any other fees that you're paying related to the business, you can deduct those as well. Like I said before, contract labor. So if you're paying anyone to help you out in the business, if you're having an event and you hire someone to help out at the event, you can deduct the cost of paying those individuals to help. And then just remembering that if you pay them more than $600 during the year, you do have to report that on a 1099 form to the IRS at the end of the year. So the next one is insurance. So if you have any like business insurance or liability insurance that you're paying, you can certainly deduct those expenses. Legal and professional fees. So if you pay any costs to kind of, again, if you're setting up a website or if you're setting up anything for your business, if you're setting up an LLC and you're registering with the state, or you have an annual LLC filing with the state, any of those legal and professional fees can be expensed. And then also, like as part of if you pay someone to prepare your taxes, if you think about your tax returns, part of that return is accounting for your business and part of it is for personal. So you can allocate, a certain percentage of the tax preparation fees as a business expense as well. And we'll talk about other expenses that you can allocate, but for that, maybe you say half your tax return is related to your business, so you can deduct half those fees. Supplies, this could be anything from, if you're having an event, any supplies you need for the event, any office supplies you use in your business, really like any supply that you use. If any of the supplies are, again, if anything is used partly for personal, partly for business, you want to allocate, just the business expense, just the business percentage as an expense. Travel and meals. So this would include like going, and below that I have meetings and conferences, but this would include going to conferences. If you're going anywhere, locally for an event, to meet up, to network with others, the costs of any travel that you incur, any tolls, if you are providing meals for the event, and again, if it's for a business purpose, you can deduct those as well. The next one I would say is a big one that maybe people, we might not be aware of or might not track, is business mileage. So again, if you're going out to meet with clients or potential customers, any networking events, if you're going to a conference and you're driving to the airport, you can deduct your business mileage. So there's some different apps that you can use on your phone. You can just track this in an Excel spreadsheet. But in order to deduct the business mileage, you do have to keep track of your total miles that you drive in your car during the year and then your business miles. So the business miles are, like I said, there's some apps. One of them is called like Mile IQ. Again, you can just use an Excel spreadsheet, but you want to track the miles that you drove and what the business purpose was. And then you can deduct that on your tax return as well. And for 2022, it's 58.5 cents per mile. So that can add up. Event costs. Again, if you're having an event at your home, if you're having an event somewhere else, any costs that you're incurring to put on the event, as long as the event is related to kind of networking or trying to solicit sales, you can deduct those costs as well. I know, a lot of people make social media posts or videos. So if you're purchasing any photography or video equipment to make those materials or videos, that equipment can be deducted as well as any software programs that you use to kind of put things together for social media. Professional development. So again, Andrea, you said that you are a certified health coach. So if you have to do any continuing training, or if you're even paying for your license, if you have to pay a registration or a licensing fee to be the certified coach, those are all deductible as well. But professional development could include things like purchasing books that you want to read that are related to the business. Again, taking any online courses, pretty much anything to further your knowledge regarding the business. Meetings and conferences I touched upon with travel, but any registration fees for the meetings, travel to the meetings. So when you're there, if you're having like meals, if you have to pay for your meals, there is a deduction for those too, although the meal deduction is limited to 50%. So if you're spending $100 on a meal, you can deduct 50% of that. Office supplies, shipping and postage, again, anything that you're mailing out, anything that you're using in your office, you can deduct as well. Again, software, if you're purchasing any special software for social media, anything like that, if you use any record keeping software to do your accounting, that's deductible as well. Now utilities, this one, so telephone and internet. This is one that most people would allocate. So obviously you use your cell phone for business and personal, as well as your internet. If you have internet at your house, you're using it both for personal and business. So you definitely want to keep track of all of your monthly expenses for the telephone and internet, and then allocate it based on what percentage you think is personal and business. So like for mine, for example, for my tax business, I'll take our telephone and our internet, and first I'll divide it in half. So I'll say like half of that is related to my husband and half of that is for mine. And then for mine personally, I'll say what percentage I think is related to my business, and what percentage is for personal use. So, just keeping track of that in a spreadsheet or something is fine as well. But those are sometimes like some overlooked deductions. Website expense, again, if you have your own website for your business and you have to pay any fees or for the domain name, anything like that, those are deductible. And related to a home office, so any furniture or decor that you purchase for your home office, you want to keep track of those. Those are also deductible. If you're giving any gifts to anyone, and we'll talk about home office a little bit more I think it's in the next slide. Any gifts that you're giving, if you're giving gifts to any clients, you certainly can give gifts, but just know that on your tax return, you're only allowed to deduct up to $25 of gift per person per year. So if you give someone a gift for $50, you can just deduct $25. And then I know, Andrea, you said someone had a question about clothing. So like clothing that you might have to purchase or wear to a conference. So clothing is only deductible if it's like protective wear, which is not really applicable in this business, or promotional wear. So if you're buying anything, that promotes Juice Plus or that promotes your business, it has a logo, anything like that, you can deduct the cost of that clothing. But just buying like new clothes for the conference that you would also wear, every day, those are unfortunately not deductible. Okay, so home office. So I know this one is a big question that people have. So in order to deduct a home office, you do have to be self-employed. So people that are employees for a company and they work from home, unfortunately, they can't deduct home office anymore. They used to be able to in the past, but the rules have changed. So as a self-employed person, the IRS has a few requirements. So they said you must use the home office regularly and exclusively for business. So regularly means you can't just use it, every once in a while and claim it as a home office. But then at the same time, you don't have to use it every day. You just have to use it like on an ongoing, consistent basis. So it does have to be a space that you're using, on an ongoing basis for a business. I know that's kind of vague, but so like if you're using it, once a few times a week, you're consistently doing business there and you don't really use it for another purpose. Obviously like you pay bills and stuff, you might do that from your desk, but if you're not really using that space for another purpose, then it's considered that you're using it regularly. So exclusively, again, this one means you're only using it for business. So if you're doing business from like your dining room table or your kitchen counter, your couch, those cannot be claimed for a home office because it's not like a defined space. So it does have to be a defined space that's kind of separate from your personal living quarters. So what you can deduct, so there's two types of expenses that you can deduct for home office. So one is direct expenses. So these are ones that are like solely related to your home office. So we talked about like furniture and decor, or if you're painting the room or you're doing something to that room, you can deduct 100% of those costs. So if you're purchasing like a new desk or you're purchasing some decor for the office, those would be 100% deductible for the home office. And then the next one is indirect expenses. So this one, again, this can add up. This could be like a few $1,000s of a deduction or more. So this takes all of the expenses related to maintaining your home, and then it allocates a portion of that to your home office. So the first step is to define like where your home office is and calculate the square footage. And then you'd calculate the square footage of your home, and that will give you a percentage. You'll take the square footage of the office as a percentage of your home. So perhaps that's 10, 15, 20%. The next thing you would do is you would look at all the expenses to maintain your home. So things would include like rent if you have an apartment, if you own your home, the mortgage interest that you pay. So not the mortgage payment, but just the interest portion of the payment. Any real estate taxes, HOA fees, utilities, which would be, like electric, water, garbage, any cleaning fees if you have a cleaning service, a security system, any repairs that you do to the whole home. These would all be expenses that you can allocate to the home office. And there's probably, you might have others, but these types of expenses can be allocated to the home office. So again, these can certainly add up. I've seen people that this can be $5,000 in deductions, depending on how much you spend on your overall home and what the square footage is. So before we move on from home office, because I know this was a question that a lot of people had, does anyone have any specific questions related to the other expenses we talked about or the home office? No? Okay. So this next one is self-employed health insurance premium. So again, as a self-employed person, we don't have an employer. So we may not have an employer. You might have another job where you have an employer, but we don't have an employer. So we could potentially deduct the health insurance premiums that we pay. But there's two requirements that you must meet in order to do this. So the first one is that you must not be eligible under any employer sponsored plan. So if you have another employer and then you also have a Juice Plus business on the side and you're eligible under your employer plan, whether you choose to participate or not, just the fact that you're eligible under an employer plan would make you not eligible for this deduction. Or if your spouse has an employer and they give your spouse the option to include you on their health plan, then you would not be eligible for this deduction. But if you're not eligible under any employer plan and you pay your own health insurance premiums out of pocket, then you can deduct those premiums on your tax return. So once you've determined whether you're eligible or not, the second requirement is that you actually have a net profit from your business. So you're allowed to write off the health insurance premiums up to 100% as long as you have net profit above that amount. So if your premiums are $10,000 per year and you have net profit from the business of $10,000, you can deduct that whole $10,000 on your tax return. But if you only had net business income of $5,000 and you paid $10,000 in the health insurance premiums, you would only be able to deduct $5,000. That's your maximum amount because you only had net profit of that amount. And this would include so if you are eligible, it would include health insurance premiums for health coverage, dental, as well as long-term care premiums. So this other one, so if you prepare your own tax return or you have someone that does it for you, this is a deduction. It's actually a very big deduction that you can take on your tax return. So you want to make sure that you are taking this. So it's called the qualified business income deduction, and it's for self-employed individuals, again, not employees, but just self-employed. And what it is it's a deduction of up to 20% of your net business income. So let's say that your net income from self-employment business is $20,000. You'd be able to take a deduction of 20% of that on your tax return, just for the mere fact of being self-employed. So this is a big one. It's new. It only came about in 2018. But this one can be really significant. So again, you want to make sure you're taking advantage of this one, as it reduces your taxable income. So it's based on what's called your qualified business income. So you have your business income on Schedule C of your tax return. That's your gross income minus all of the expenses that we talked about. And then if you do take that health insurance deduction, or if you take a deduction for a self-employed retirement account, which we'll talk about, you would also deduct those to get to your qualified business income. And then that's the number that you would take a 20% deduction.
So somebody just asked in the chat to explain that again. So if I were to try and understand what you just said is, say, for example, this particular person made, like you said, $20,000 with their Juice Plus in the year. They brought home the 20,000, you would get 20%. You could go to your, whether file your taxes or go to your CPA and mention the qualified business income deduction, and you get 20% off the $20,000 that you earned. That part would be deducted and you'd get that returned.
So you wouldn't get $4,000 back. But what you, so let's say you had no other income, like your only income was the $20,000. You would, so you, instead of being taxed on the $20,000 from your business, you'd be taxed on $16,000.
Okay.
So yeah, it's not a refund of $4,000, but it reduces your taxable income. So instead of being taxed on 20,000 in that example, you'd be taxed on 16,000. But you know, if you're making, say you're making $100,000 from the business, you can deduct 20,000. So you know, the more you make, the more the deduction is.
Sorry, and what is that called?
Oh, sure. It's called the qualified business income deduction.
Okay, thank you.
And it's right on the slide, qualified business income deduction. So if you want to take a screenshot, you could do that. And that way you have it.
Tax preparers would also refer to it as QBI, which I put in parentheses. So, and that would be like a deduction against your income. It's right on like page 1 of your tax return. So
that's good to know. I like that deduction.
Okay, so the next topic is the self-employed retirement savings. So, you know, some people may want to contribute to retirement, some people may not. You know, it depends how much you're making from the business, how much cash flow you have, but you do have the option to save for retirement, and any contributions that you make to any of these self-employed retirement accounts, they also reduce your taxable income. So similarly, you know, we talked about any expenses that we have, those offset our income. That qualified business income deduction offsets our income. So these retirement contributions can also offset your income, which again, depending how much you make and how much you contribute, it could be, you know, significant. Every little bit helps. So there's really 3 types of retirement accounts for self-employed, and which one is best for you depends on like how much you're making from the business. So generally for people making like under $55,000, the simple IRA would be the best option. So it lets you contribute up to $14,000 a year. And because you're also the employer, you can also contribute an extra like matching contribution for yourself of 2 to 3%. So again, you're the employee and the employer. But this one, like, so even if you made $14,000 in your business, and let's say you didn't need the money, you know, so just kind of like extra money, you could put that full $14,000 into a retirement account, and then you wouldn't end up paying, you know, any income tax on that because you're essentially reducing your income by the whole 14,000. Now, I will point out that you would still have to pay the self-employment tax, which is that Social Security and Medicare, but it would reduce your taxable income for federal income tax purposes. If you make more than 55,000, then the first one that I have listed, the SEP IRA, is more beneficial because it just allows you to contribute a higher amount. It lets you contribute up to 25% of your net earnings from self-employment. And then that's capped at like $61,000 for the year. But again, any contribution that you make dollar for dollar reduces your taxable income. So if you make $20,000 from the business and you contribute, you know, $14,000 to your simple IRA, you're only getting taxed on $6,000. So you get to keep, you get to keep your $14,000 and instead of paying money over to the IRS with higher taxes. So, even though you can't access that money till retirement, you're still kind of keeping it in your own pocket. And the solo 401k, I have this one listed, but I would say most people don't use it just because it's a little bit more complicated from a reporting standpoint. And it doesn't really offer too many other benefits that the other two accounts don't. But this would be a 401k that you would just set up as like a single person business, and you can contribute the same amounts that an employee can. So up to 20,500 or up to 27,000 if you're over age 50. But each year you do have to file like a separate form with the IRS for that one, whereas the other two accounts, there's no reporting requirements. And then again, just pointing out, so your contributions are deductible on your tax return, and they do reduce your taxable income. So thus they reduce the amount of taxes that you have to pay. So I always try to, as much as I can, I try to put money into it just to take that deduction on my tax return and then also save. Okay, and then just like some basic record keeping. So, so record keeping is good, to know what you have as your net income from your business during the year, so you can make those estimated payments, and then you can, report it at the end of the year for tax purposes, but also just for your own knowledge, like knowing what parts of the business you should spend more time on. Like, are you making more money from selling tower gardens, or making more money from, selling the products that have the recurring revenue each month? Kind of just gives you an idea of like where to focus more of your time. So that you can use any system for record keeping. You can use like just a journal and paper. You can use Excel. You could use QuickBooks. FreshBooks is another like accounting software. The Mile IQ was one I pointed out to track your business miles. That one is like an app that you download on your phone, and it just automatically tracks your mileage. You would just, indicate if it's a business trip or not. But these are all tools that can help you with your record keeping during the year. And then the burden of proof, as the IRS says, is always on the taxpayer. So any expenses that you're reporting on your tax return, you want to make sure that you're able to prove them, like if you were ever audited. Now it's pretty rare that people get audited, but you want to be able to, have the backup to show and document the expenses. So I would include any receipts. For the mileage, it would just be your record of the miles. If you're allocating items between personal and business, just keeping track, if it was like your utilities for telephone and internet, you just keep track of those statements that you have with those fees and how you determine the percentage. And then if you do set up like a single member LLC versus just being a sole proprietor, you are required to have a separate business banking account. Because again, the limited liability company, it protects your personal assets. So you can't commingle like your business and your personal expenses and spending. So you do have to have a separate business bank account. And I would say just like in general, even if you're a sole proprietor, like a best practice would be also just to have like a separate bank account for the business activity. So, you can deposit your you can deposit your Juice Plus income into that account. You can pay all of your expenses from that account, and then you just take distribution. So you pretty much just like transfer money from that account to your personal account, whether it's weekly, monthly, but it's just a good way to kind of keep track of all of your expenses and keep that business separate. And just a few special rules, like you talked about expenses for travel, transportation, gifts, meals, and entertainment. So for travel, like, so if you're going to a conference and let's say the conference is for 3 days and you decide to stay for 5 days, any travel associated with those 2 extra days would be personal expenses. So when you're traveling, you want to just make sure that you're just deducting the business portion of the travel. Now, let's say you did that and you had the conference for 3 days and you stayed for 2 extra days. If the primary purpose of the whole trip was to go to the conference and you just, stayed for those extra 2 days, you can deduct the whole cost of the flight. It's just any additional like hotels or meals for those extra 2 days would be personal. But if the primary purpose of the trip is business, then the flight itself is deductible. Transportation, as I said, tracking the miles. But if you're also paying like parking or tolls, the parking and tolls are also deductible. But to be able to expense the miles, you do have to like certify on your tax return that you have like a written evidence. So again, just like a log is fine for that. The gifts, we talked about that limit for $25 per person per year. And then, like I said, meals and entertainment. So if you're going out and you're meeting a prospective client, you're taking them to lunch, you can deduct 50% of that cost. But you also just need to keep track. Again, you could use a journal or an Excel file for this. Just keeping track of who the lunch meeting, or who the meeting that you had a meal with, who was there and what was the purpose of the meeting. And again, just Excel or something is fine for that too, but you want to just make sure that you're kind of keeping records to support all of your expenses. And then, yeah, any questions? So again, if you have any questions on what we talked about, my email is here. You can feel free to email me. If you wanted me to send you any links to any additional information or tax reporting, any of the record keeping tools, just feel free to send me an email, and then I can certainly get back to you and send you any information.
Becca, that was incredible. And I just wanted to share that when I first started this, I was all over the place. And then I ended up getting a credit card that I use for everything that's Juice Plus. So I'll put my product on it. I put my flights on it, everything that has to do with hotels or traveling. And then I feel like at the end of the year, I can take that whole statement. I put anything on it, like what you had said about personal development, things like that. Gifts, so I have it in one place. So that's been helpful for me.
Yeah.
But thank you, Becca. That was absolutely amazing. It was so well done, professional, organized. Does anybody have any questions before we go out? Or at least if you want to say, no, I want to respect everybody's time, but to say a huge thank you to you, because that was great information. Really appreciate it. Amazing job.
Thank you. Yeah, I know taxes aren't everyone's favorite topic, so trying to show how you can save money. Let me just see if there are any other questions.
And feel free to unmute and say goodbye if you're going to be logging off.
Yes, thank you, Andrea and Becca. That was wonderful. And the slides were great. I took pictures of several of them to,
Okay.